Right now, Bitcoin is trading at 62,055, down nearly 3% in a single breath, down over 1,800 points. But here's what nobody is telling you. This is not a dip to buy. This is a liquidity trap designed to wreck both sides, and if you don't understand the structure, you will become the exit liquidity. There is one danger zone, and one hidden opportunity right now. I'll show you both. On screen right now you see the number, 62,000, and the phrase trap, 2 scalps, 1 swing. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. If you wait for the news to make sense, you've already missed it. The instant market verdict. We are in a full-scale risk-off cascade, and Bitcoin is the risk asset shadow collapsing right alongside the S&P 500. Session bias is aggressively bearish, fading every bounce, trend continuation short. Not range-bound, not accumulation. This is distribution turning into panic. The single invalidation level that flips my entire bias. If we get an hourly close above 63,800, the structure resets. Write that number down, 63,800. Above that, this bearish thesis is void. Until then, every rally is a short. Here's why that matters. The herd is still positioned net long. Funding rates have barely flipped negative, and the crowd is buying this dip with size. That means the fuel for a liquidation cascade is fully loaded. If we lose 60,000, leveraged longs get obliterated, and the move accelerates into a vacuum. Now let's get into the technical deep dive, from the monthly right down to the 5-minute chart. The monthly trend, strong sell. The weekly, strong sell. Daily, strong sell. 4-hour, strong sell. And on the 1-hour, strong sell. That alignment is rare. It tells you the path of least resistance is down, and any bounce is a sale, not a reversal. Look at the weekly chart. Bitcoin has broken below the 20-period moving average, the 60, and the 200 at 75,562 is miles above. The MACD on the weekly is deep in negative territory, accelerating lower, no hint of a bullish cross. The daily chart is even more brutal. Price is below the 5MA at 63,153, the 10MA at 62,814, the 20MA at 62,690. All sloping down. The 50MA at 65,182 is now major structural resistance. That's your ceiling. The RSI on the daily is at 44.8, not even oversold. That means there is plenty of room to fall before any mean reversion bounce has legs. The MACD on the daily is negative 351, collapsing. This is momentum-fueled selling, not a slow bleed. Now, here's what most traders miss, and this is critical for timing your entries. Look at the 1-hour chart. The stochastics are at 97.3, deeply overbought. Williams percent R is at minus 4.78, pinned near zero. Overbought on a strongly bearish hourly trend. That is a trap. It means the market is squeezing out a tiny bounce, giving hope to dip buyers, right before the next leg down. The ATR is 1,905 points. That's your volatility budget. The pivot point for today is 63,889, but price is 500 points below that. The classic support levels, S1 at 63,528, S2 at 63,281, S3 at 62,920, have all been shattered. They are now resistance. This is the broken support becomes resistance principle. So the cluster between 62,920 and 63,530 is a brick wall. Any bounce into that zone will get rejected violently. Below, there's a volume gap down into the 60,000 psychological level and then a low volume node stretching to 58,500. That's where the liquidity pool sits. That's our swing target. The cross-asset linkage seals the conviction. Right now, Nasdaq futures are down over 1%. The VIX is spiking above 22. Oil is surging on the US-Iran headlines, and the dollar is bid as a safe haven. Bitcoin is correlating almost 1-to-1 with the QQQs, acting as a high beta tech stock. When the macro risk-off switch flips, Crypto leverage gets crushed first. ETF flow data from the last 24 hours shows nearly 200 million in outflows from spot Bitcoin ETFs. The institutional positioning has shifted from neutral to net short on the CME. Open interest is still elevated, meaning the squeeze lower has room. The narrative that Bitcoin is digital gold is not working today. It's trading like a risk proxy, not a hedge. Until that correlation breaks, you treat BTC like a levered Nasdaq position. Now, the fundamental driver and the 1 to 2 week directional lean. The immediate catalyst is the US-Iran escalation. But beneath that, we have a broader liquidity drain. The Fed's balance sheet reduction is accelerating, real yields are climbing, and the dollar is strengthening. That's a toxic cocktail for risk assets. My 1 to 2 week lean is for a continued grind lower, targeting 58,000, possibly 55,000 if the macro deteriorates further. The event that invalidates this bearish medium-term view, a weekly closeback above 65,100, reclaiming the 50-day moving average. If that happens, the thesis is dead and I flip neutral. Until then, short the bounces. Do you think Bitcoin breaks below 58,000 this week? Comment yes or no right now. I'm tracking consensus and I'll shout out the most accurate call in tomorrow's video. Most people skip this section, the trade setups. That's exactly where the money is made. Keep watching. I'm giving you 3 precise strategies, all derived from the levels we just mapped. Write these down. Strategy 1, the opening scalp. This is a high probability fast snipe using the 15-minute chart. We're looking for a relief bounce that kisses the broken S3 level at 62,920. That's the zone where trapped longs will try to get out and new shorts will stack. The exact trigger. Price taps 62,900 to 63,000 and prints a bearish engulfing candle on the 15-minute time frame. Entry is immediate at the engulfing candle close, around 62,850. Stop loss at 63,400, just above the S2 pivot and the minor swing high. That's a $550 risk per Bitcoin. Take profit 1 at 62,100, a quick $800 move. Risk reward already better than 1 to 1.4. Take profit 2 at 61,300. If momentum carries into the liquidity gap. That's a 1 to 2.8 risk reward scalp. What instantly voids this scalp? If the 15-minute candle closes above 63,400 before we get a bearish entry, step aside. No trade. The opening SELP entry, 62,850, 15M bearish engulfing after tap of 62,920 to 63,000, stop loss. 63,400 take profit 1, 62,100 take profit 2, 61,300 risk, reward, 1:2.8R, to TP2, invalidation. Void if 15M candle closes above 63,400. Strategy 2, the liquidity grab. This is a counter-noise scalp that exploits the stop hunt every market maker runs before the real move. Here's the setup. We know that overnight, the 1-hour high was printed right around 63,500. That's where sell stops are resting above. The play, wait for a fake breakout above 63,500. A spike that hunts those stops, then immediately rejects and closes back below 63,000 on the 15-minute chart. That's the trap. You enter short on the snapback confirmation. Entry at 62,900. Stop loss is placed just above the wick at 63,750, so your risk is $850. Target is a fast grab of the nearest intraday liquidity pool at 62,000 even. That's a $900 profit on an $850 risk. Borderline but with high probability because of the stop hunt dynamic. Warning. This requires fast execution and you must be at the screen. If the breakout sustains above 63,750, you do not short. The structure has changed. The liquidity GROB entry, 62,900, 15M close back below 63,000 after a spike above 63,500, stop loss, 63,750 take profit 1, 62,000 risk, reward, 1:1.06R invalidation. Void if price holds above 63,500 for more than 5 minutes without a rejection. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. The next setup is the session swing, and it's the one that could run for days. Strategy 3, the session swing. This is the trend alignment trade that captures the multi-day move down to 58,000. We are waiting for a 4-hour close below 62,000 to confirm the next acceleration leg. The trigger condition: a 4-hour candle close below 62,000 with the MACD on the 4-hour chart still in bearish territory and expanding lower. That tells you momentum is reasserting. Entry on the close at 61,980. Stop loss is placed outside the daily structural level at 64,500, above the daily MA20 and the last minor swing high, so you give the trade room to breathe without getting shaken out. Risk is $2,520. Conservative swing target, take profit 1, is 60,000 even. That's a 1 to 0.8 R, but we trail. The stretch target is 58,200, down in that low volume node. That's a 1 to 1.5 risk reward on the stretch. The trailing stop rule: once price hits 50% of the way to TP1, which is around 6,990, move your stop to entry. Then trail by the 4-hour ATR of about 800 points. The invalidation that shifts the medium-term outlook entirely, a daily close above 65,000. If that happens, the swing is dead and we reassess. This is how you let the trend work for you while managing downside. The session SWNG entry, 61,980, for H close below 62,000 with bearish MACD, stop loss, 64,500 take profit 1, 60,000 take profit 2, 58,200 risk, reward, 1:1.5 R, to TP2, invalidation. Void if daily close above 65,000 risk management pulse. Never risk more than 1 to 2% of your account per trade. With Bitcoin's ATR at 1900 points, scalps demand even tighter risk, so size down. No positions through high-impact news like sudden geopolitical headlines. Stops are non-negotiable. This is how you survive to trade the next big move. Disciplined, cold, calculated. Now let's close the loop and prep you for tomorrow. The single most critical level for the next session is 62,000 on a closing basis. If the 4-hour candle closes below that, the swing activates and we target 60,000, then 58. If it holds and we get a swift rebound back above 63,800, the bear trap springs and we could see a violent short squeeze. That's the cliffhanger. Tomorrow, I'll be watching the US session open and the S&P 500 gamma levels. If equities crack further, Bitcoin will follow like a shadow. I'll have the updated blueprint 24 hours from now, with fresh levels and the next trade. If you want the full breakdown on trading gold, oil, the dollar, euro, pound, Aussie, yen, and the S&P 500, those videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. Scalp the noise. Swing the trend.